Hello student, welcome back to my class. Today we will going to learn what is calls in advance. Well, what is calls in advance? Now, when any shareholder pays any amount relating to calls prior to the due date, it is known as calls in advance. That means if any shareholder pays his amount relating to calls, that is his first call or second call or third call, prior to the due date, then it is a case of calls in advance. Now, what happens? Sometimes some shareholders may pay a part or whole of the amount due on share before the amount is called up. Such amount paid in advance is known as calls in advance. Now, according to Companies Act, calls in advance can only be accepted if it is authorized by the Articles of Association. Now, the amount so received as against calls in advance is the debt of the company until the calls are made, and thereby it is adjusted against the respective calls as and when the calls is made. That means if any shareholders pays his amount relating to calls before due date, that is calls in advance, and this calls in advance must be mentioned in the Articles of Associations of the company. If it is mentioned if it is considered or mentioned in the Articles of Association, then and then only a company can consider calls in advance. So now we will see the journal entries relating to calls in advance. For receipt of advance money, or we can say calls in advance money. So, bank account debit to calls in advance account. See the journal entry, bank account debit. So you know well that when amount is received, so bank is debited, bank account debit. The amount so received by the bank is against calls in advance. That is why we have credited calls in advance. Bank account debit to calls in advance. This is a journal entry for receipt of advance money. Now, when calls become actually due, calls in advance is adjusted at the time of the call. So, the adjustment entry is calls in advance account debit to share. Now, if it is a first call, then here we will write to share first call, to share second. If it is a second call, then second, and if it is second and final call, then you can write second and final call. See the second adjustment entry. This is the adjustment entry. Adjustment entry. In this entry, we have debited calls in advance and we have credited to share calls. That is, if it is first call, second call, another call. Now, see both this entry. First of all, if for receipt of advance money, if a company received the advance money, then you know that bank is debited to calls in advance. The amount so received by the bank is against call in advance. Now, this calls in advance is adjusted as against the call money. If it is first call, second call, then we have debited calls in advance account and then we have credited to share capital account. That means bank account debit. If we cancel this to bank account debit to share calls account. So this is the adjustment entry. So these two are the entries that are important in calls in advance. Now we will see the interest of calls in advance. So on calls in advance, the company will pay interest, which will be mentioned in the articles of association of the company. That is, the interest that the company will pay in calls in advance, it will be mentioned in the articles of association of the company. Now, if the articles are silent regarding the rate of interest in calls in advance, then table A is applicable. Table A, TABL, table A is applicable. Now, in table A, it is mentioned that the rate of interest for calls in advance is 6% per annum. So, remember student, in table A, the rate of interest for calls in advance is 6% per annum. Interest in calls in advance is a charge against profit. Remember the point, it is a charge against profit. Now we will see the journal entries of interest in calls in advance. So remember the rate of interest in calls in advance. Rate of interest according to table A is 6%. If in the question, if it is mentioned the rate of interest, then do accordingly. If question is silent regarding the rate of interest, then you should follow table A, and according to table A, rate of interest is 6%. Now the accounting treatment of interest in calls in advance. Now on payment of interest, on payment of interest on calls in advance, the journal entry is interest on calls in advance account debit to bank account. That is, interest is a nominal account, debit expenses as losses, and it is paid through bank, so bank is credited. Interest on calls in advance account debit to bank account. Now interest on calls in advance is an expenses for the company. At the end of the year, it is transferred to the profit and loss account. So the transfer entry is, this is the transfer entry. Transfer, now I will write transfer entry. The transfer entry is profit and loss account debit to interest on calls in advance account. Now see these two journal entries. First of all, on payment of interest on calls in advance. If we pay interest on calls in advance, it is debited, bank is credited, because we are paying interest on calls in advance. And as interest on calls in advance is a charge against profit, it is an expenses for the company, so it is adjusted from the profit and loss account. That is, we have credited interest in calls in advance and we have debited profit and loss account. So these two are the journal entries in case of interest on calls in advance. So this is our question and we will solve this question. First of all, we will go through the question. We will see each and every point of the question. Every line we will read carefully and we will remember the point which will be important for doing the sum. So let's see the question. Birla Limited invited applications for the issue of 10,000 equity shares. So what is the number of our equity shares? 10,000. And the class of the share is equity. Remember these 2 points. Of rupees 10 each. So the rate is rupees 10 each. Here it is not written that it is issued at par, premium or discount. At each, 10 at each, that means shares are issued at par. As rupees 2 on application. So on application rupees 2, on allotment rupees 3 and rupees 5 on the first and final call. First and final call. The shares were fully subscribed, called up and paid up. So first of all, read up to this much carefully, that the total numbers of equity shares is 10,000 and shares are issued at par rupees 10, rupees 2 on application, rupees 3 on allotment and 5 on first and final call. All the shares were fully subscribed, called up and paid up. Next, let's see the next thing. However, one shareholder holding 300 shares paid his first and final call money along with his allotment money. See, one shareholder, he is holding 300 shares. He has paid his first and final call money along with his allotment money. That is, what is the amount of allotment? Rupees 3. He has paid rupees 5. That is first and final call money along with the allotment money. That is a case of calls in advance. That is, the company has not called for the first and final call money, but the shareholders holding 300 shares has paid his first and final call money along with his allotment money. The first call was made due after 3 months. Remember this point, due after 3 months. These 3 months is important for calculating the interest, rate of interest on calls in advance. 3 months. After 3 months, the company has made the first and final call. 3 months of allotment. After 3 months of allotment, the company has made first and final call. And interest on calls in advance was allowed as per the rules of table A. See, in the question it is written that interest on calls in advance is allowed as per the rules of table A. So, what is the rate of interest as per the rules of table A? 6% per annum. 6% per annum. So, these are the points. First point, 10,000 equity shares. Shares are issued at par 10,000. On application rupees 2, allotment 3 and rupees 5 on first and final call. And one shareholder holding 300 shares has paid his first and final call money along with his allotment money. And the allotment and the first and final call was made after 3 months of allotment, and the rate of interest is according to table A 6%. Remember all these points and solve the sum. This is the format of our journal. So at the above we will write in the books of the Birla Limited. It is the name of our company is Birla Limited, and below we will write journal. The first column of the journal format is date column, second column is the particulars column, third column is the ledger folio, fourth column is the debit column, and fifth column is the credit column. Now first of all, so as the date is not mentioned in our question, we will not write the date. First of all, we will pass the application money received entry. So where application money is received, bank is debited. Bank account debit. The amount so received by the bank is against application money, and the class of our shares is equity. So we will credit equity share application account. Now see the entry, bank account debit to equity share application account. That is, amount is received by the bank as against equity share application money, and our class of our shares is equity, and the money so received is against application money. So the numbers of the shares is mentioned in our question is 10,000, multiplied by, what is the rate of application? Rupees 2. 10,000 multiplied by rupees 2, 20,000. Clear? Now we will write the narration. Being the application money received at the rate of rupees 2 per share on 10,000 shares of rupees 10 each. So this is the narration. Being the application money received at the rate of rupees 2 per share on 10,000 shares of rupees 10 each. So first journal entry, this is the first journal entry, and this entry is for the receipt of application money. Now we will give the second journal entry, and the second journal entry is to transfer the application money to the share capital account. So the second entry is equity share application account debit to equity share capital account. Numbers of shares 10,000, rate is 2, 10,000. The amount so received as against application is transferred to the share capital account. See the entry. In this entry, I have transferred the application money to the share capital account. Now we'll write the narration. Being the transfer of the application money. See, I am writing here the transfer as because it is a transfer entry. Money at the rate of rupees 2 per share on 10,000 shares of rupees 10 each as per board's resolution number ... dated ... So this is the narration of our second entry. Being the transfer of the application money at the rate of rupees 2 per share on 10,000 shares of rupees 10 each as per board's resolution number ... We are putting dot as because this is not mentioned in the question. Dated ... So this is the transfer of application money to the capital account. Now we will give the allotment entry. That is the due entry of allotment. So the due entry for allotment is equity share allotment account debit to equity share capital account. So this is the due entry for the allotment. Now what is the numbers of shares? 10,000 multiplied by what is the amount of allotment, rate of allotment? 3. 10,000 multiplied by 3, that is 30,000. 30,000. See the entry, equity share allotment account debit to equity share capital account. This is the due entry for allotment. Now we will write the narration. Being the equity share allotment money due at the rate of ₹3 per share on 10,000 shares of ₹10 each as per board's resolution number dated. So see the narration. Being the equity share allotment money due, it is the due entry, due at the rate of ₹3 per share on 10,000 shares of ₹10 each as per both resolution number ... So now the company will receive the allotment money. As in the question, it is said, the question is said that the one shareholders holding 300 shares, he has paid his first and final call money along with his allotment money. So in this entry, then in this next entry, we will see how we will do the calls in advance money. How will adjust the calls in advance money. This is the important journal entry, so see carefully. Now, this is the receive entry of allotment, bank account, debit. Here, first of all, I will write the entry, then I will write the amount. Okay, bank account debit. To equity share allotment account. To calls in advance account. See, bank account debit. Now here we will write the amount. First of all the shareholders has paid the allotment money. This is said in the question. All the shareholders has paid the allotment money. So total numbers of shares 10,000 multiplied by 3. Allotment money is 3. Okay, 10,000 multiplied by 3. Now plus one shareholders holding 300 shares. How much? 300 shares. He has paid his first and final call money along with the allotment money. Into 5. The rate of first and final call money is 5. See the calculation. 10,000 total numbers of shares holders has paid the allotment money. This person who has holding 300 shares, he has paid allotment money. Okay, the calculation is here. Plus he has paid ₹5. That is the first and final call money. And the holding of his shares is 300. So we will calculate this two and write the amount here. So 10,000 multiplied by 3, 30,000, and 300 multiplied by 5, 1,500. That is 31,500. Now equity share allotment account. So what is the numbers of shares? 10,000 multiplied the rate of allotment is 3. 10,000 multiplied by 3, 30,000. And calls in advance 300 multiplied by 5, 1,500. See, debit and credit come equals. So this is the journal entry, very important entry. Bank account debit to equity share allotment account to calls in advance account. So the narration for this entry is being the equity share allotment money received at the rate of ₹3 per share on 10,000 shares of ₹10 each along with the first and final call money on 300 shares at the rate of ₹5 per share in advance. So see the narration. Being the equity share allotment money received at the rate of ₹3 per share on 10,000 share of ₹10 each along with the first and final call money on 300 shares at the rate of ₹5 per share in advance. So this is the receipt entry. Now we'll write the first and final call entry. Due entry for first and final call. So the due entry for first and final call is equity share first and final call account debit to equity share capital account. So what is the numbers of shares? 10,000 multiplied by the rate is for the first and final call is 5, that is 50,000. See the entry, equity share first and final call account debit to equity share capital account. Now we write the narration. Being the equity share first and final call money at the rate of ₹5 per share on 10,000 shares of ₹10 each as per board's resolution number ... dated ... So this is the narration for your first and final call due entry. Now we will write the receipt entry. So now we will write the receipt entry of first and final call money, and we will adjust the calls in advance money in this entry. So the receipt entry is bank account debit. So the amount is received as against equity share first and final call account. Okay, now calls in advance account. See, bank account debit. We will adjust here. So total numbers of shares is 10,000. Am I right? 10,000. In 10,000, one shareholder holding 300 shares has paid the first and final call money in allotment. So 10,000 minus 300. So now the numbers of shares is 9,700. 9,700 multiplied by 5. The amount is received by the bank. And calls in advance is 300 multiplied by 5. This one. Okay. So bank account debit 9,700 multiplied by 5. And calls in advance 300 multiplied by 5. Am I clear? 48,500. Right? 300 multiplied by 5, 1,500. And equity share first and final call 50,000. So this is how I have adjusted. This is how I have adjusted the calls in advance money in the first and final call receipt entry. So now I will write the narration. Being the first and final call money received at the rate of ₹5 per share on 9,700 shares. Here we will write 9,700 shares after adjusting calls in advance. So you know well that narration is the brief explanation of your entry. That's why we will write clearly in the narration what you have done in the entry. Being the first and final call money received at the rate of ₹5 per share on 9,700 shares after adjusting calls in advance. So here we have adjusted the calls in advance. Now student, we will calculate the interest on calls in advance. Interest on calls in advance. So I have told you the journal entry regarding interest on calls in advance. So the journal entry is, as the interest is a nominal account the company is paying, so interest on calls in advance account debit to bank. This is the entry. This is the entry for paying the interest by the company to the shareholders. Interest on calls in advance to bank account. Now see the calculation. You can do working note. As there is no space is limited, so I am doing here. First of all, what is the numbers of shares for which the company will pay interest? The numbers of shares is 300 and amount for allotment is first and final call is ₹5, that is 1,500. Okay. Now what is the rate of interest for calls in advance? So in our question it is given that we should follow table A. So according to the table A, the rate of interest is 6%. 6 by 100 multiplied by. Now the first and final call is made after 3 months of allotment. That is 3 months. 3 divided by 12. Total 1 year. In 1 year 12 months, 12 and 3. How 3? As because allotment is first and final call is made after 3 months of allotment. That is 3 months. Now calculate this one. So we will get interest here, the amount 22.50. So write this one. This is very important. Calculation of interest on calls in advance. Don't write this one in the format of your journal. Write in the rough space or at the back of the copy page. So the rate of interest is 22.50. I am rubbing this one as because I will write the narration, that's why. So now I will write the narration. Being the interest on calls in advance paid at the rate of 6% per annum for 3 months as per the regulation of table A, as per the regulation of table A, and as per board's resolution number. So student, this is the interest on calls in advance money. The company has paid interest on calls in advance. As I have said you earlier that it is a charge against profit, so this entry will be adjusted by passing another entry at the year end. The company will adjust this one in profit and loss account. So our last entry is transfer of interest on calls in advance to the profit and loss account. Profit and loss account, debit to interest on calls in advance account. So what is the amount? 22.50. See this entry. In this entry I have transferred this one, interest and calls in advance, to the profit and loss account. Now I will write the narration. Being the transfer of interest on calls in advance to profit and loss account. So I have transferred the interest to the profit and loss account. Now student, so practice again and again so that all the things will be clear to you, because you know practice makes man perfect. So if you practice more and more, then you can easily solve the tough sum.